Today's brought to you by Silvercrest Opportunity Fund. Invest accredited for terms as low as 1 year and a 10% or better rate of return. Welcome back to the Mobile Mailbox Money stream, and I am Alden Guajardo, President of Silvercrest Opportunity Fund, Vice President of Win Mobile Homes, and founder of Mobile Mailbox Money. Lot going on this week. We've gotten back from the Inland Empire Real Estate Investment Club, where we received a $200,000, $180,000 soft commitments from capital investors used to manufactured housing. We had our mastermind yesterday, Business Network International this week, and got a new fund investment whose soft commit will hopefully go hard today with a $100,000 wire, where he'll participate in a 10% return for a 1-year term or 12% for 3 in an income-oriented investment strategy, investing like Warren Buffett. In manufactured housing, today's topic for the live is top due diligence items for investment success. Number 1 is collateral verification. Confirm the property title is clear. No liens, taxes, or judgment. Confirm that they actually own the property or any outstanding debts, and ensure the property is properly insured and located in a stable park or community. This being case specific on manufactured housing for someone that may want to buy a note in whole for their portfolio and receive the full yield on the interest-bearing contract. Proper verification is important of titles, liens, taxes, insurance, in order to mitigate any potential risk or non-performance or, wrong setup, wrong consummation of a sale. Number 2 is borrower payor underwriting. Review income verification at least 6 months as you require, or 2 years of tax returns is a common underwriting criteria. Confirm debt to income ratios are sustainable, ideally 55% or less, as that mimics a debt to income ratio of FHA requirements, creating a bank quality position. Pull and review credit history, rental history, or payment performance. So essentially you're making sure that they're an upstanding citizen, running a background check, running credit history, and making sure, or ITIN number in our Hispanic environments, but making sure that they pay their debts. Ultimately, that they're a quality borrower for the best chance and ability to repay, to perform on the loan. Remember, we're buying a loan here. We're not buying a property with a rental. So this buyer went through formal qualifications in order to facilitate ownership and receive a seller carry finance loan. Number 3, note or loan documentation. Review the promissory note, the security instrument being the mortgage, deed of trust, or UCC filing. In manufactured housing, it's just a note, and the recording of the lien position on title through the DMV. With residential real estate, these will be drafted through an attorney or title office in order to consummate these documents and do the process properly. So, that note will be secured through a mortgage and a lien on a residential property, and probably file with the local legislature, the local government entity, to record that note. Ensure compliance with Dodd-Frank and SAFE Act when applicable. Kind of interesting time to be talking about that, as the CFPB, the Consumer Finance Protection Bureau, is actually ordered to start to dismantle. So that's one in question. It's always important to make sure that you're adhering to compliance, federal regulations, in order to operate successfully. You got TRID, you got a couple other case specifics, the UCC codes, in order to ensure compliance. With the end user or primary residence homeowner being on these loans, or a loan that you're looking to purchase, it's important to make sure that that was done properly through possibly a licensed mortgage officer and underwritten third party to limit your risk. right? So could be risk in originating paper, but here at Mobile Mailbox Money and Win Mobile Homes, we've got those checks and balances. Verify payment history if buying a seasoned note. So that will come with the third-party verification of the contract servicing company. So you'll verify if seasoned, how many payments were made, are they on time, have they made late payments, are they reperforming, all areas of conversation to adhere to in order to mitigate risk. If you're buying a table funded note, meaning at table of origination, you're buying that note day one that it was drafted. Obviously, there's not going to be any payment history, but making sure that it was properly originated, your title position was implemented, whether through a title company or us being a dealer, we could originate that lien position immediately through our brokerage license 8670 Win Mobile Homes. What's the market valuation on that property? Number 4, verify appraised value or broker price opinion. Check neighborhood demand, vacancy, rent comps, resale comps. Confirm the note balance doesn't exceed conservative loan to value of 70%. That's a conservative approach. Remember, as someone maybe buy a table note and that buyer put 10% down, the case unique situation of that discrepancy of say a 70 to a 90% loan to value is ultimately the underwriting had on that note. How was that buyer underwritten, right? Did they actually go for formal qualifications in order to facilitate a bank quality position? Well, in our case, they do. They actually go through 2 rounds of formal underwriting in order to facilitate a higher grade of investment and easier availability to consume a loan at 90% of loan to value. Why? Because they fit a 600 plus credit score, ITIN number, no past criminal convictions, no open bankruptcies, no past evictions, and verifiable income. And then additionally, once they hit that bar with the community, almost like they're passing in an HOA environment, but a little bit more restrictive in that accord, as you could be kicked out because of criminal background and things of that nature. Not case exclusive to the other aggressive offenses, could be just a misdemeanor or a felony, a non-aggravated felony. But also they go through a second round of underwriting in order to fit the ability to repay Dodd-Frank compliance and have a lower debt to income ratio than 55%. They have to have 2 years of tax returns. They have to, go through the ringer. Ultimately, we put them under a microscope. And if the bank will lend on properties at 90% loan to value, so will we. Why not? It's an underwritten asset. The people that find themselves saying no are they're not wrong in their ways, but they don't understand. Understanding the qualifications, this is a higher level grade of investment on the paper and provides further qualifications than a conventional real estate note. These people go under the microscope, people. So, take that into consideration. Finding 70% loan to value notes is tough in the market to begin with. But we could help you execute either way out in the market and buy a note depending on what your risk factor is. So number 5, cash flow and payment structure. Confirm monthly payment amount, amortization schedule, and term. So ultimately that will be had through a mortgage calculator, and you can get that for free. We use Carl's mortgage calculator online. If you don't have that, do yourself a service and download that tool at your utility belt in order to confirm payments, validate interest only versus amortized note terms. Interest only is more of like a construction loan or say a cash out refinance loan for someone that has a high equity upside. Amortized loans are going to be 20, 25, 30-year loans, and it's paying principal and interest, in other words. So run yield to maturity projections to compare. My background went off here. But validate interest only, run yield to maturity projections to compare with alternatives. So long story short, You know, these are attractive yields. You could participate and make double your money, literally 100% on your money. If you have money in a low yield savings account, in bonds, in 6% mutual funds, 8% mutual funds, I can get you 50% more on your money, quite literally, in a bank quality position. But, you know, run that comparison. Run what your manager on your financial advisor position is actually taking, and what's your net operating income of your rental strategy with management fees, maintenance, property taxes, insurance, you know, all the above, the sweat equity of taking phone calls and getting pissed off because your management company is now increasing fees, or your financial advisor is just putting you in low yield, you know, accounts and telling you that that's the smart thing to do. You don't always have to listen to these people. Individuals that are watching today, you know, this is for the intelligent investor actually wanting to participate and not have to listen to an individual give you excuses. Well, what's your exit strategy? Number 6, due diligence item. Have multiple options. Hold to maturity for income, resell, or a hypothecate. Hypothecate means to pledge an asset in order to garnish capital investment. Foreclose, repossess, worst case scenario. So the multiple exit strategies in a note, you know, you can hold a whole note for the full yield and the full term. It may pay off within that time because there's no prepayment penalties on our paper. Some have prepayment penalties, or a balloon. We don't so much encourage that, but they're able to pay it off at any time, and that could happen. Resell the note. You could resell this note on the secondary market, it being a higher rate of return and higher yield on the paper presents an attractive option for resale, because people will pay par value or close to, or even possibly even more, depending on the performance of that note, what it's drafted at, and you know, how the payments have been. If they pay like clockwork and that note is 14%, you could sell it at 12, make 2%. Recapture of an annualized rate of return on the unpaid balance of the loan. It's super advanced strategy. If you don't know that, go to noteinvestoruniversity.com or one of the various other dedicated note investment specialists. Or you can hypothecate that note. BRRRR, you heard of the BRRRR strategy? Buy, rent, resell, refinance, repeat. You can buy this note for the full unpaid balance, right? Make, say, the yield on the paper of 14%, and pull all your money out by leveraging, say, your aunt's capital, who she trusts you as a haven for savvy investment. You pledge that note for collateral to the your relationship, Aunt Jenny, say, at 10% of the 14. You pull all of your money out, and you're still making 4%, and you go up back and rinse and repeat. It's called hypothecation, advanced strategy. If you don't know that strategy, go to the Mobile Mailbox Money Mastermind and learn how to raise private capital. Foreclose or repossess, really important to understand. In a personal property manufactured home note, these notes are executed through repossession and eviction processes. How long does that take? It's a 40-day process, 2 weeks pay or quit, 2 weeks to remedy, 2 weeks to be evicted. And then on that eviction, you get a reinstatement of title, or affidavit of repossession, and you get the title back, you get the property back. And within 40 days, you're now inside the home doing a move-in, move-out special, most likely, and putting it back up for sale to mitigate loss, or even make additional profit or break even. You know, those situations happen here and there. We have about a 2% default rate, 2%. People, 2% default rate. Out of every 100, that means 2 could fall behind. Won't find that in very many other cases. So, you know, that way you get the property back, you repossess it, you reperform it. We can help you with that. If you buy a whole note within your portfolio and take it out of our ecosystem, we'll allow you, our back office staff at cost, the availability for our attorneys, our sales staff, and things of that nature. And if you're looking for possibly a quote on what that looks like, join our mastermind every Thursday at 12 o'clock Arizona time. We're calling now at 602-888-CASH. Number 7, legal and regulatory compliance. Ensure the investment complies with the SEC rules if pooled fund based. Verify licensing check investor suitability. So in other words, if you're buying a note in its entirety, one investor on one note, you don't have to be accredited, nor do I have to succumb to selling a security. That note is not a securities instrument. It's actually selling an acquisition and a sale. So you're buying a note that I've originated here in the local market of Arizona. You don't have to be accredited in order to do so. And we have terms as low as 1 year through hypothecation on that program. Where am I at here? We're at legal and regulatory. So through our fund, SEC 506C 3C1, providing accredited investors to pool their money and buy in a per unit owner share of my portfolio of notes. I actually have an investor I just met at Azria. He referred me his brother, who's not accredited. He took a position of $60,000 on a hypothecated note for a 1 year term at $500 paid monthly. And the other investor is going to invest, I think today, send $100,000. He hadn't quite sent a text to confirm that, but he's made a soft commitment in the fund 506C 3C1, and he'll earn a 10% return for a 1 year term or 12% for 3. One paid monthly, one paid quarterly. So that's a fund investment. So both are verified and offered. The Wynn Mobile Homes dealer, license 8670, largest dealer of manufactured housing in Arizona, actually originates the note with a licensed mortgage officer on staff. So fully compliant, fully SEC compliant, fully available for non-accredited investors to buy one note, and hold that note in their portfolio or hypothecate that with the largest national operator of manufactured housing operating here in the Arizona market. Number 8, servicing and collections. Confirm who services the note. Professional servicer versus self-managed. Verify escrow setup for taxes, insurance if applicable. Ensure you have transparent reporting and tracking of payments. That's why we use a third-party contract servicing company in order not only to put up a wall between the note holder, the debtor, or the investor, for the end user buyer to be able to call, make payment. They can receive monthly emails of amortization schedules, how much interest they paid, and all the above. So taxes and insurance are important to stay up to date on. We have forced place insurance if they fall behind, and we get notification from the insurance company because we're listed on the insurance policy as the lender. We just implement forced place insurance, and that is a potential that's a default potential if they don't end up picking that back up. That puts our position at risk. So we always have insurance. In other words, we're listed on the policy, the home's fully insured, that's required over what they paid for it, and replacement costs. So literally bulletproof position. Sponsor operator track record, review track record. Number 10, sponsor. Review track record of the operator or fund manager, confirm history of payment distributions and investor references, evaluate alignment of interests, co-investment, skin in the game. Well, I'm Alden Guardo, and I'm president of Silvercrest Opportunity Fund. I've done over 300 of these deals in the Arizona market. I'm probably one of the most qualified individuals in the nation for a position like this. We built our business on the back of bootstrapping, buying and flipping manufactured housing, growing to be the largest dealer of mobile homes here in Arizona. WinMobileHomes.com came up with Mobile Mailbox Money as just a off the cuff whim, looking for additional growth, trying to put some stuff out there. And Win Mobile Homes wasn't an investment company that was to buy and sell mobile homes. We were operating as an investor, but I needed a catchy name, so I came up with Mobile Mailbox Money. And so she wrote 2 years ago. We have 780 videos online, video references, video walkthroughs, masterminds, capital investment interviews at Diversified Mortgage Expo, Paper Source, Noteworthy, the Directed IRA Alt Summit, the SDIRA Summit. I could go on. We have had industry experts like Eddie Speed, Mark Monroe, Patrick Franz, Desi Arnaz, And the list goes on, people. My track record is long, lengthy, and bulletproof. In other words, so we're currently seeking immediate capital investment. Bottom line, due diligence equals protection. It's not just about returns. It's about knowing your collateral, knowing your borrower, and knowing your operator. Why? Because it's all fun and games trying to track a 2x equity multiple, but when you lose all your money, things start to make a lot more sense. So I encourage you today to go to mobilemailboxmoney.com and check out the notes that we have immediately available on our website. I'll share Mobile Mailbox Money real quick. So we have live deals immediately available, and I'll go over one that I'm consummating actually, or have immediately available, in other words. But this note here is one we drafted and got actual commitment from the Inland Empire Real Estate Investment Club. So this note, I believe, will be in a soft commitment stage today. Lot 56, I have this note actually immediately available. It says 70,000. I could take as low as 50 in a position like this. And I actually have the photos here, this property on Dropbox. So this is a $50,000 position, paying like $400 and something a month. I could look at that in just a sec. But, you know, I went live on this home actually the other day, actually live negotiating with the homeowner on my Facebook page. There's the gentleman there. We actually got to an agreed upon purchase price of $10K. These photos are a little bit blurry, but I've took them out of a screenshot on this video at the bottom. So this is at 400 West Baseline Road, Tempe. This is lot 56. I'm currently seeking capital investment for a 1-year term on $50K. So you receive a first lien position with one of the largest qualified operators in the nation in manufactured housing at $416 a month, paid monthly, passive rate of return, bank quality note at literally 50% of value. If it was 50,000, I'm looking for 70, which would be great. But the benefit of getting into a property like this is it's affordable housing. The biggest need in the nation is affordable housing, especially here in the Arizona market. And we've done upwards of $2 million in this one park. 400 West Baseline Road, Chaparral Village. I've done 20 homes in this community. Callahan Properties is a $1 billion business, and the owner knows my name. They actually ask about us frequently. Why? Because we're doing so much freaking business in the valley. I don't think you guys understand how much we're entrenched here in providing a solution to the affordable housing crisis and taking advantage of the opportunity available to cash flow in a pro forma status, outpace traditional real estate investment strategies because our yield on the paper is that much higher. What does that mean? That means we're cash flowing for more with less, quite literally less capital needed in order to earn a higher rate of return. You see me around Tempe Town Lake, you know, Mesa, Tempe, Phoenix, Glendale, Apache Junction, all the major metropolitan markets here in Arizona. I could go on. Let's check out Win Mobile Homes site real quick and we'll close it out here. You know, we've got an immediate note available. We've got fund open availability, but this is winmobilehomes.com, the largest dealer of manufactured housing here in Arizona. We have 25 homes in inventory that are immediately available with seller carry finance and lenders immediate on these homes, ready to facilitate a loan. So if you know somebody that is looking for housing, we have down payments for as low as $5,000. And match or beat market rent. On the investment side, providing a higher stability because the ability to repay is that much more of a chance to happen at the end of the day because they can't go anywhere for cheaper. On the end user side, they get pride of ownership in a manufactured home just like this, lot 69, actually at the same address, 400 West Baseline Road. This home we did a full rehab, but for say $10K down, they have a $2,500 a month payment and they own a home with granite counters, tile in the bathrooms, tile backsplash, new cabinets in the kitchen and bathrooms, new vanities, new plumbing, electrical, siding, windows, roof. I could go on. These homes are, fantastic for new buyers, for blue collar, for all the above. Anyone that can't qualify for residential real estate or is tired of renting, that's windmobilehomes.com. We're here at 25 minutes, possibly one of the longer morning or it's 10:45 Zooms, or not Zooms, live streams that we've done. So go back, check out the vlogs, the masterminds, the podcasts. Currently seeking immediate capital investment from accredited investors in our 506c3c1 accredited investment fund, Silvercrest Opportunity Fund, and you could earn a 10% return for a term as low as 1 year, or 12% for 3, investing like Warren Buffett. Invest today with Silvercrest Opportunity Fund. Today's brought to you by Mobile Mailbox.